Hi, this is Steve Davis over at Total Wealth Academy, and this is Learning the Lingo, a glossary of real estate terms. The first term that I want to define is one that harms a lot of people because they don't understand it, they do it incorrectly, they use the wrong information to evaluate the deal. It's a thing called ARV, or after repaired value. And once you master this, it builds up your confidence to make decisions, write offers, get property under contract, close, and build your portfolio. But what you're looking for is what has every other house identical to yours or as close as you can get sold for. I don't care if there's 10 houses in the neighborhood that are asking $400,000. If the average sale price of your subject property sold, the sold houses averaged $350, guess what your house is worth? $350. And you can say, well, I can upgrade it, I can add this, I can do $20,000 worth of work in the backyard, landscaping. Guess what? You've still got a $350,000 house. You can't improve the value of single-family real estate with amenities. Now that rule changes once you move to commercial, apartment complexes, senior living, and so on. But when you're dealing with single family, don't be deceived. Don't think that you can go buy the house for $350, put $20,000 worth of work into it, and all of a sudden it's worth $370. Nope, it's still a $350,000 house. You want to be buying your properties way below ARV based off the amount of repairs necessary, your holding costs, and so on. So when I go out to buy a $350,000 house, if I know it needs $50,000 worth of work, I'm wanting to buy that for around $250. Then I put the $50,000 in it, $10,000 worth of holding costs, I'm in it at $310, and that thing's gonna produce positive cash flow, and I'm gonna buy that house and have picked up $40,000 equity the day that I buy it. My net worth goes up and your net worth goes up $40,000 the instant you buy that property. So master ARV, run the comps, find out what every other house just like it or as close as you can get to it have sold for. You don't care about what they're asking. You don't care about the tax record. What have they sold for? Once you have that number, be confident, make the decision, write the offer, get that property under contract, and get that deal in your portfolio. Thanks for watching.